It's flooding in today. Let's look at how our airports company, South Africa, is doing. It saw its income rise despite difficult global conditions for airports. The company says total revenue rose just shy of 9% to just under 8 billion rand for the year that ended in March. Both its aeronautical and commercial businesses drove those profits up. The company reported passenger numbers climbed by more than 2% to just under 18 million passengers.
Currently, ACSA gets most of its revenue from its aeronautical business, which comprises of charging passengers and airliners for taking off and landing at the airports it controls. Its non-aeronautical business includes retail, property, car rental and car parking, among others. The company says it wants its non-aeronautical business to account for 55% of its revenue by 2020.
ACSA has got a strategy to look at other airports, providing airports, we call it airports management solutions. Whether you need assistance in terms of the infrastructure built in terms of an airport, whether be it in South Africa or even internationally, we are basically offering the skills that the company has currently got to be able to generate further revenue. This is more, looking into diversifying our asset portfolio.
ACSA already has a presence in India and Brazil, where it's providing its skills and knowledge, and its long-term plan is to continue such partnerships, with the rest of the continent being of key focus.
During the financial period, the company signed an MOU with Ghana Airport, and in that regard, ACSA will be providing the consulting services and helping them. So indirectly, we will be generating additional revenue.
Hints at the depreciation of the rand, which makes imported products more expensive, the weaker currency could actually be a boon for ACSA.
What it means is that if, let's say, the international passengers, we experience growth in that regard. It basically means that there's an increase in purchasing power in terms of the passengers that comes into South Africa. So as a result, they spend more at the airport, so we therefore see the retail revenue going up.
ACSA is due to hear from its regulator as to whether its current tariffs are to be cut over the medium term and to what extent. The state-owned enterprise has warned that any tariff cuts should not be deep, as it will adversely impact on its cash flow and hinder its capital expenditure plans going forward. Nampumelelo Siziba, SABC News, Johannesburg.